Gold has been consolidating, but is it gearing up for a lift off or facing another leg down? Welcome to Trade Heaven, your sure hotspot for mastering forex and crypto market. In today's breakdown, we are analyzing gold using my triple confirmation strategy, the Elliott wave theory for chart pattern, then the Fibonacci retracement tool for price, then stochastic RSI indicator for momentum to know the buyers and sellers within the market. And here's the bonus for you. I'll also be sharing trade setups for the week, including key levels to help you trade smarter. If you are serious about your trading and want to stay ahead of the chart, make sure to like this video, subscribe, and hit the notification bell icon so you never miss a high probability setup. So let's dive in. So here is the 4-hourly time frame for gold, the XAUUSD. So you can see we have been consolidating, having this consolidation since April 22nd this year. So before we talk about the our Elliott wave pattern here, let's have a top-down Elliott wave outlook of gold USDT. Let's start from the monthly time frame and also look at the momentum indicator and also fib retracement ratios too. So here is the monthly chart for gold USDT. Gold USD, sorry. So you can see the chart as far back as 1935, but we'll be focusing on the most recent data. So let's look at this. So this is more like the most likely wave count is this is our wave 1, wave 2, then we are on wave 3 currently, then we'll be having wave 4 subsequently, then wave 5. So you can see this wave 3 is also broken down into 1, 2, and 3. Then this is our wave 4. What we are experiencing, the consolidation currently, is more like a wave 4. If you look at this wave 3 also, it's also broken down into 1, 2, 3, 4, 5, but let's not go into too much details. And also look at the monthly stochastic RSI. Is looking more like a bearish divergence is forming. So most likely, if we have the next leg up, we'll most likely top out to have a wave 4 correction with this bearish divergence that is forming. Will give us our wave 4. So let's look at what the weekly is saying. Weekly momentum is, there's a bullish divergence we just had here. Momentum. Then sorry, let's also look at fib retracement ratio for this monthly before we go to weekly. So here is the wave 1. So if we take from the top of wave 1 to the low of wave 1, and then we'll project it to our current. So you can see our 3.618 retracement ratio is still here, and we know with 4, the maximum with 4 can get to is 400% retracement ratio, like according to our Elliott wave principles. So most likely with 3.618 is our next target for wave 3. So that's why we projected this. And we can't say this is a wave C because wave C cannot exceed 2.618 as a principle. So let's go back to our weekly time frame now. So for weekly, we can see the wave count more clearer. You can see our wave 1, 2, 3, 4, 5 for wave 1, and we are seeing how, okay, let's bring out this wave in between on this weekly. So now you can see our wave 1, wave 2, we've had our 3. So the consolidation we've been seeing since is our wave 4, and we'll be having a blow off, as in a leg up to the upside for wave 5 to complete this Elliott wave count. And you can see this bottom we have here is corresponding to this stochastic RSI. So now let's look at this wave count in between this wave and project our fib retracement ratio. So for this wave 1, this is our wave 1 and wave 2. So if you have to project this from this wave 1, you can see that our wave 3 was perfectly, as in it perfectly aligned with 3.618 retracement ratio. You can see how it topped at that point. So then let's then go down to our daily time frame and see what. So the momentum is also bullish, also telling us, and it matches with this low we have here. So both weekly and daily momentum is showing us a bullish signal. Double time frame momentum pointing the same direction is an A plus setup for us. So we'll get, as we go on in the video, we'll talk more on this particular, and I'll give you my weekly outlook. So now daily time frame is also telling us, you can see the wave pattern. We can even project even this wave 3 further to be 1, 2, 3, 4, and 5. So let's quickly go to 4-hourly time frame and talk about the current. So let's make our chart clean now by taking this off. So having done a top down Elliott wave and fib retracement with stochastic RSI momentum outlook from top down outlook. So let's focus on this consolidation and why we are looking out for a breakout in the coming days to week. So here is the pattern we have for this consolidation. Is looking more like a double zigzag pattern. So here's our first zigzag as an ABC correction. So here is our second zigzag as an ABC correction. Then for me, this is an X. So if we have to bring it out to be a WXY. So this is a WXY, which is a double zigzag pattern. So this is a bullish scenario. Let's make this. So having talked about this, and it will give us this wedge pattern. If you have to project this like this, then this. So this is a. So let's quickly have a look at it. So these are A, B, C. These are X, then an A, B, C. And now this last wave, we can say we have a wave 1, wave 2, a wave 3, wave 4 and a wave 5. So this meets the criteria for being the end of correction, most likely, based on the patterns we are seeing right now. So, and why do I think that yes, we have actually we, we should be looking for a buy instead? Why do I think that the price has finally turned? We should be looking more to buy, although the 4 hourly momentum is showing us that yes, we are overbought and we should be expecting some form of correction. So let's look at this pattern. So let's focus on this side and look for our setup for the week. So here is the local high, the last local high we have. So there's a break of structure in this place. And also, we also have a break of structure. Sorry, let's clone this. There's an internal break of structure here too. Then we have our low here. Then there's a high here. Then there's a higher high here. Sorry. And now there's a higher low in this place. So the next structure we should be looking out for, and where we should be looking out to take our trade, is the next higher low. So we should be looking out to take our trade from the next higher low, and based on Elliott wave. So from this we can see that there's a shift in market structure based on what we just illustrated. So based on this, you can see that there's an external change of character in this place. So there's an external change of character in this place. So let's look at our Elliott wave count. We'll be looking out that yes, this is our wave 1, wave 2, wave 3, and this new higher low we're anticipating should be our wave 4. Then we'll take our wave 5 from there. So having established that yes, we've had a shift in market structure. So let's project based on our triple strategy now to get our entry targets. So let's drop down to 1 hour time frame to be able to count the wave within the wave. So in this place we have our wave 1. This is our A, B, C of wave A, and this is our wave B, A, B, C of wave B. This is our C. So now here's our wave 1, 2, 3, 4, 5 of wave 3. So let's bring this and project 1, 2, 3, 4, 5. So after a wave 3, we should be expecting an A, B, C, D. So if you look at this, very well. What was the target for our wave? Our usual target for wave 2 correction is 50 to 61% to 78% retracement ratio. So we got to the 61%, but we didn't get to the 78% retracement ratio. So based on this now, we can say yes, the wave 2 correction was a deep correction, and it was more like a complex correction. And one of the Elliott wave principle is wave 2 and wave 4, they alternate. There's this alternating pattern with them, that when wave 2 is complex, wave 1 is more going to be like a simple ABC correction. So based on that, and our wave 4 targets usually should be at most 61% retracement of wave 1 to wave 3 or wave 3. So if you are to project from wave 1, we should be looking at the most we should expect wave 4 to get to is this point. But let's just project for just wave 3, and let's take this off. So our target for wave 4 will be, so we don't have to project 78% retracement, but so our major target will be 38%, 50%, and 61% retracement ratio. So based on this and the fact that yes, if you are to talk about price action trader, they'll say here is a support here. So we are looking at this support. Well, smart money concept traders, there will be a liquidity sweep to the downside more. So I'm going to look more at these two zones as my entry zone. So the price of Bitcoin, we should be expecting an ABC correction. So this is more like our wave A, wave B, and we should be expecting a wave C to the downside to this target. So once we get to this zone, the zone of 32, 33, 32. That's 3,332 zone. We should be looking out for a buy from these three zones. So when price retraces to this zone, we'll then have a deeper look at what the price is doing and look for confirmation for entry. So this is it for today. So if you are new to this channel, please don't forget to like, subscribe, hit the notification bell icon so you don't miss out on any of our content.